Greetings and happy Easter to you. As I've had a chance to reflect back upon this first quarter of 2022, it's been very eventful, more than I ever anticipated. And as I look back to January, the last time we did this recording, the conversation was around supply chains, inflation, the Federal Reserve beginning to tighten, the end of fiscal stimulus coming out of Washington. And then in February, of course, we had the Russian invasion of Ukraine. And I really almost feel badly talking about the global implications for that, but just our heartfelt sympathy to those people in the Ukraine. But the reality of it is the Russian invasion of Ukraine does have global implications, and we'll talk a little bit about that. So I think exactly what I had thought was going to happen is heightened volatility in the equity markets in the first quarter, and we saw that. And the markets actually reacted quite well after the Russian invasion. The markets did sell off some, but they've come back quite strongly here at the end of the first quarter. As we look out, I still expect this volatility to remain heightened this year because the Federal Reserve will continue to raise rates, I think, probably at every meeting going forward this year. So to start the year, we talked about supply chains, inflation, the Federal Reserve raising interest rates, all of this. Well, that's what we still have going on today. The Federal Reserve will continue to raise interest rates, trying to make the cost of capital more expensive, trying to slow down the economy. We have a couple other factors going along with that, too, is the rise of inflation, the increase in energy prices. That's a tax on the entire economy that gets transferred on to everybody, and we're going to have that with us for a while. We'll talk a little bit more about that going forward, but that's one of the realities of taking the Russian oil off the global market. So supply chains, I think we will begin to see supply chain issues work their way through as corporations figure out different ways of shipping and actually getting different components that they need. But the Russian invasion didn't help. Locking Russia out of the global economy is actually really going to hurt. Russia is the number one net exporter of wheat in the world, and Ukraine is the number 4 exporter. And there's been talk of food shortages. We will not see that here in the U.S., but there are parts of the country that are huge net importers of food. And we've Africa, the Middle East, China, and we probably will see famine this year is a real reality as we go through, locking them out of the global economies. So I'll talk a little bit about, I think, the possibilities for the United States as we go into the future because of that. Another real difficult thing for the U.S. economy is this full employment. We have twice as many job openings as we do unemployed. And the reality of it is this rise in wages is going to be a sticky part of inflation. Because as we get later on in the business cycle and there's less workers, businesses are unable to expand through adding people. So that's going to be a real challenge going forward. The millennials now are kind of out of the workforce, but this Gen Z is a much smaller generation. And at the same time, we have the baby boomers retiring en masse. So we don't have an increase in workers. And that's going to be something that we're going to have to figure out a solution for. So, but having said all that, as I look into the future, I'm still fairly bullish on the U.S. economy this year and even into 23 because of this COVID reopening. This is real. And consumers, their balance sheets have never been stronger. Actually, at the end of last year, American household net worth was almost $167 trillion. And Americans are still sitting on almost $15 trillion of cash. And they will spend that. Americans aren't good at sitting on cash. That money will get spent. And I still believe this will be the year of experiences, of travel, of getting out and doing things. And we're really beginning to see that. So let's watch that trend. But I think that will actually trickle over to a lot of the rest of the world because we are net importers here in the United States. So if the United States is doing well, it will help the rest of the world. So I'm very positive about that as we look off into the future. I think the concerns are going to be this energy and food. And I think benefits and possibilities for the United States going forward is we've got the capabilities to provide more food to the world. And I think we can do that. We've got, our farmers are the most productive farmers in the world, and we are net exporters of food. So I think that is real growth, or a real growth possibility over the next couple of years. The other area is around energy. And nobody wants to talk about hydrocarbons, but we need a bridge from our current economy, our current energy, to this future renewable energy. And we have natural gas. And since this invasion, we've gone to Venezuela, we've gone to Iran, these other nations, asking them to increase increase energy production when we can do it here much cleaner and much safer than they can do in their nations. And I think we're going to see that. And that's a real opportunity to keep that money home in American companies, American landowners' pockets, as opposed to these other nations. So let's watch that closely. But the other thing it does is it helps to stabilize our partners in NATO, stabilize their economies. Europe is going to have a real difficult time this year. When you look at natural gas prices, which is the basis of their energy in Europe, the prices are 6 or 7 times what they are here. So they're going to have a real challenge. So we'll want to watch those things. But I go back to energy security is part of national security. And we need to think about that as we bridge to these new energies. So what does that mean for us here at Heritage? What does it mean for our strategies? What does it mean for your portfolio? We're not making any big changes. We don't react to these type of things because we plan for them. These are the unknown unknowns, the things that we don't know that are going to happen. Just 3 months ago, I was talking about the Fed, and all the conversation was around the Fed. And then we have this with Russia. I still think what the Fed is doing is going to have the greatest impact because they're trying to slow the U.S. economy to rein in inflation. What we will do is look for opportunities to rebalance the portfolios, to maybe make minor tweaks and adjustments as we go. We've already done some tax loss harvesting. We'll do things like that as volatility happens throughout this year. But I would say the patient investor is always the one that's rewarded. So we will continue with the strategy. And if we need to make changes, we'll talk about that in our meetings. So I think I'll finish my comments there and just say I look forward to seeing you in meetings or at some of the events that we have coming up. And let me know if you have any questions. I can go into more detail with you if you really want to. So please let me know if you have any questions, and thank you for watching today.